Oh boy, here we go again. Back to work tonight, guys. Hope you had a fantastic day out there. A bit slow today. That's all right, though. We found some pretty good trades this morning in the morning trade room. It is Thursday evening, though. We're getting ready for a big Friday trading session. We always seem to find some good trades on a Friday, and boy, we have a lot to cover here tonight. We got some triangles, we got some wedges, we got some range breakouts. No shortage of trades to look for tomorrow, and you know me. I'm going to cover all my favorite trade ideas in the video here tonight. That we have a game plan to make some money on Friday. Before we jump in and get the party going tonight, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoy this stuff, hit that like button. Give me a shout out down in the comments section below. Thank you so much for tuning in, supporting the YouTube channel tonight. But enough of the intro. Let's get ready for Friday. We always seem to find a couple really good setups on a Friday morning. Boy, there's a lot going on all three of these markets right now. We have basically a consolidating triangle right now on the S&P. We have a bullish wedge, you can see here on the Nasdaq. And we have what appears to be a range breakout, right? Basically a breakout of that trading range that we saw earlier in the week on the oil. All three of these are pretty different, right? But they all kind of tell us one thing. And that is bull traps, right? Bull traps. Bull traps appear to be where likely the easiest money will be made here for tomorrow, right? Bull traps above the high of that trading range on the S&P. Bull traps up inside of resistance around the high of that wedge on the Nasdaq, and definitely bull trap, but more of a breakout pullback style bull trap, right? On the crude oil as well. Lots of really good short setups we're tracking here for tomorrow. And I'm not just all about, I've definitely got some long side trades we're going to talk about tonight. So I'm not going to be only one side of the equation. Things can always change on a Friday, but we have a lot of bull traps on our radar, maybe some full blown reversals and some breakdowns today. So we're going to talk about all the details in the video here tonight. It's going to be a great video. So get comfortable, take some notes. Before we jump in though and go over the trades here for tomorrow, let's all get on the same page here. We've got really one big news event tomorrow morning. That, of course, is that consumer sentiment number at 10 o'clock Eastern time. These are, you wouldn't think they're very important. There's only a green star right here on the Econo Day calendar. But I'll tell you, don't be surprised. These do tend to move these markets around on Friday morning. Now, remember, we were supposed to have a debt ceiling meeting tomorrow. We, of course, had one on, Wednesday afternoon, if I recall. It all kind of blends together sometimes, doesn't it? But, Tuesday afternoon, and they kicked it down to Friday. Well, apparently that's been kicked into next week here now. So from what we know right now, there's no debt ceiling meeting at the White House. It sounds like parties on both sides are doing their little sub meetings right now. So there might be some leaks or some headlines coming out tomorrow. So that's definitely something I'll be watching for tomorrow on the news feed. And keep in mind too, tomorrow's a Friday. Fridays, what do we always talk about? The mindset on a Friday is try to get into trades early and try to leave something to run, right? Fridays love to float. They love to run. And so I always try to have that mindset of let's find something early, right? And then try to get into it and leave something to run, right? Into lunch and potentially into the afternoon. And if we get a big enough run, right, maybe into the closing bell on Friday, right? So 10 o'clock, that consumer sentiment for tomorrow. That's kind of the big news that we know about. Will we hear any headlines, any rumors circulating about the debt ceiling? That probably is the next big hurdle that we have to overcome here. We've made it through CPI and PPI. We've made it through the Fed announcement. We've made it through earnings. It's like just the next shoe to drop here right now is that debt ceiling. So keep that on your radar here for tomorrow. Now back to our charts, because the money is made on the charts, right? It's good to know when the news is, but we make our money as traders on the charts. And if you like making money, I would definitely make sure I would recommend you watch all the way to the end of the video here tonight, because we are going to talk about some very interesting trades across all three of these markets. And I always find a way to tie it all together. So if you're serious about your trading, I would definitely take some notes, take some screenshots, and watch all the way to the end of the video. Let's go S&P first. We'll go Nasdaq, and we'll wrap up, of course, here on the mighty crude oil. Now, first things first here, these are tick charts here tonight. You can always see time frames linked up in the upper left-hand corner. They will all be tick charts here this evening. This is the 21 EMA, the exponential moving average. And as always, I do like to give you guys a bit of a bigger picture look at these markets. I've got some 60-minute charts, some 4-hour time frames. I got some beautiful screenshots linked up in the description of the YouTube video. I like to use those as a bit of a directional bias, help me get a bigger picture lens, and help me filter for where the best trades are here for tomorrow. So if you want to get more information, check out the description for important links down below here. With that said, what's the most important factor that we have right now on the S&P? The most important thing, and all three of these markets are a little bit different, right? The most important thing right now is we have a consolidating market. And it looks like they're consolidating right around that prior week close, right? That 41.49 is last week's close. And we oftentimes see markets kind of gravitate back to that previous week close towards the end of the following week. Ranges, right? We're basically looking at a range-bound market. Ranges love to rotate. This range, you could probably say, is a little bit more of a bearishness to it, right? You got a lower low in price, a lower high in price, right? So there's a little bit more bearishness than bullishness, right, on this particular range, and we anticipate the market now is going to want to rotate back and forth, right? Back and forth around the edges of this trading range, right? Pretty simple idea, right? They're probably going to use that prior week close as a magnet right in the middle. So we're anticipating the buyers are looking to rotate higher, and because of that kind of lower high, it's very difficult to want to buy up here. That's why I said earlier I like the idea of some bull traps to sell off the high. The buyers may get a breakout. If they do get a breakout, we'll talk about some breakouts, but it's not as, unless something dramatically changes, it looks like buyers have their work cut out for them up above the high there. So I like the idea on that. I've got 3 different kind of entry patterns we'll talk about tonight to short off the high. The next big thing is, if you understand how ranges work and you understand how rotation works, if we were to not take out that high, if we were to roll over, we talked about this last night, right? What is that called, right? It's basically called failed rotation. And if that happens now, you have to think that sellers are going to go on the offensive, right? You have to think they're going to go on the attack. At that point, there could definitely be some breakouts going lower. I've got 3 different types of breakout patterns I want to talk about here tonight as well, all right? Because you could definitely see if they fail that rotation, this could get very heavy very quickly as we try taking out some of these prior lows on the 97, on the 81. If you want to see some of the bigger levels, above and below, check out those higher time frames. You'll see the levels I'm watching on those higher time frames. All right, so let's talk about a couple scenarios here. Let's cover the bull side first, because that's what should happen, right? We should go higher here. Now, as we're going higher, we're running into overhead resistance pretty quickly here, so it's not easy to find any buying opportunities. The only way to do it would really be kind of like with a bear trap, going higher here, right? You have to buy as low as you possibly could. So on the way up, if they have the guts to be a buyer going into some of these highs up here, it would be one of my trap patterns, right? That we talk about in our free trading course, right? That'd be how you'd buy it as it goes higher. What I'd rather do though is, or what I think the easier way to make money tomorrow would be on this, is to let this thing get up into some of these key areas of resistance overhead, get some of these buyers to chase this thing and see if we can trap them in up here. Speaking of traps, right? See if we can use like my failure pattern that I teach in the free trading course, right? See if these buyers can try a couple times, right? And then, one of my first mentors always used to say, the easiest way to make money is when you have an area where sellers are selling and you can trap the buyers in and use their stops, right, to get the buyers becoming sellers. Right? See how up here, right? If we can get one of these, again, I would call this a failure pattern, a 2-try failure pattern, like you guys are learning in the free trading course. If I could get a failure pattern up here, sellers are probably selling up around these highs. And if I can use the buyers and use their stops as basically fuel, right? Now the buyers become sellers and everyone's a seller, right? Everyone becomes a seller at that point. That's what I mean, right? If we've got buyers selling and sellers selling up there, that's a pretty good trade, right? Pretty good trade there. So I like that idea. Now, oftentimes, you guys are learning this in the free video course, right? Oftentimes, we'll get what's called a failure into pullback combination. And oftentimes we'll see this thing roll right over, right? It'll roll down and then pull back to that moving average. You can just get kind of an ugly one right here, right? Pop up, buyers try and fail, roll up, pull back and go, right? So that scenario off the high, right? So failure off the high and then grabbing that pullback combination like we talk about in the free trading course, right? So I like that off the high. I would also keep in mind too that, who knows, right? We may end up getting a V-top at that high as well. Okay, V-tops are pretty common in these ranges, right? We would love to go up and trap in some of these buyers for a short back down. But if we just simply V-top and kind of punch back down and begin to grind down, okay, the way you trade this is you mark off a trend line off the lows, right, the grinder lows. You bring it up around the highs like this. And then what do we always say? Look left, find some prior swings, and ultimately you can use any of the entry patterns you guys learn in the free trading course, but you want to look for that first test off the high of that channel. Okay, my favorites are traps. Okay, my favorites are traps like I'm showing you right here. But oftentimes though, it'll pop up, they'll get below the moving average, the buyers will come in, they'll try to buy it, and again, buyers are selling when they fail, right? Remember, sellers are selling, buyers are selling, right? It could be a failure, it could be a trap pattern, all right, coming off of that high. Again, any of the entry patterns you guys are learning in that free video course, which reminds me, I got a ton of emails this week from you guys, loving the free video series, so thank you so much on that. I realize most of you guys watching right now have taken that free trading course, but if you haven't taken that free class yet and learned all these entry tactics, if you're one of the few folks who haven't yet, take that, grab that link. I'll put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that free video series will teach you a simple trick to know exactly where the best winning trades are going to be each day, and I'll make it really easy for you to start making money on your own. I'll teach you my 4 favorite entry patterns. If you're taking too many losses, if you're tired of missing the best trades each day, the roadmap you'll learn in that free video series will put you on the meat, as we say, in our trade room. So definitely enjoy that free trading course and keep in touch. I'd love to know how you like it as well. Now, I want to talk about going lower, right? In a moment here. What would it take to go higher and get a breakout, right? What would it take for a breakout going higher besides a small miracle? Well, no, it could easily happen. We are an overall bull market right now on the 60 minutes, so it's definitely possible right now. Look what happened over here, right? Look what happened over here. Every time we pop up, the buyers are unable to hold the pullback, right? So what we're going to do is, if we're going to see a breakout here, right, because there's a big range up there. Again, we're overall bullish on the 60 minute, but if we can get this thing up in this area, the buyers have to come in, and they can't struggle they can't struggle, right? They have to hold that pullback and really jump. As we say in our trade room, convince me, right? Give me a convincingly strong, what we call a 1-2-3 move or 1-2-3 breakout. 1, 2, 3. Right? So we'll watch and see if buyers struggle there. If they do, right, we'll short this thing back down into that trading range. But again, the most important thing though is if they do hold that pullback and if they can jump, right, and give us some acceleration, now and again, you'll see these higher time frame levels. The levels you'll see in the higher time frames will be kind of a goal up there, but we'll then go out, start finding new channels, because we'll basically be a trending market at that point. Find new channels off the high, right? Mark it off. What I usually do in these is bring them down to these big lows, right? Find these kind of larger channels, but again, draw them off the highs and then pin them down at the lows, and then look for entries off the first test, right, off the low of that channel. Who knows, right? Maybe we do get that tomorrow, right? And of course, keep an eye on these prior highs. These areas here can be used as support as well. That's not a bad trade at all, right? It's just we have to wait for proof for it. right? We can't go, predicting that breakout right now, all right? So if we do go up, hold, and go, all right, buyers have it, right? Buyers have it. Again, we're not much in the prediction business for this, right? But if they can prove it to us, we'll gladly take that first pullback off the low there as well. All right, now, the fun stuff, okay? Now, this doesn't seem as likely tomorrow, but again, anything's possible. If we were to fail that rotation, right, and roll over lower, that really starts to feel very bearish now, doesn't it? It really does, right? If we don't get the rotation higher, it's not easy to find long trades right now, as you can see, right? So if we go lower, I could be very, very careful trying to be a buyer here. The two things that I would be looking for, well, really three things you want to look for is you want to think about the market going lower and then a breakout pullback of some sorts, right? Lower, breakout pullback, right? And so there's a couple of variations of this. For example, if we do end up kind of accelerating and running lower, as we make our way to take out some of these lows down here, the way that you short this going lower is with traps, right? With bull traps. Right? Oftentimes what will happen is it'll punch lower, begin to grind down, right? And all that momentum, right? All that momentum now for the bears, very heavy. And you'll just see, right? You'll see bears coming in and they'll just start picking off traps, right? Above these highs. Okay. So if this thing starts to kind of accelerate down and grind down like that, the trades are pretty easy to find, right? For those shorts, right? You simply look above prior swings and look for traps, right, in the above those highs, okay? The other thing you want to think about, too, is if we end up kind of popping down and we start getting these big rolls going lower, this is where you start thinking about drawing channels off the highs, off the lows, bringing them up, right, around the highs. This will be more of a bigger picture channel, right? And again, going out, finding those swings, same idea, right? I can apply any of the entry patterns, right, off the high of that. I love traps. It could easily be moving average comes down, right? Buyers get stuck above the moving average, right? Sellers are selling, buyers are selling, right? With a failure pattern, right, off the high of that new channel. All right. But again, the most important thing you want to think about if the move goes lower is as it's going lower, it's those little shallow traps, right? That way you're not selling too low. And then if we really begin to accelerate down here, then we start going, okay, where is this level? Where is this level, right? Start looking for that breakout, pullback, get up into some of these, again, basically what prior support becomes resistance. Right? So things like this area right here, right? Big moves down, popping up, right? And shorting back down again, right? Using failures, using larger channels as we go from there. All right, guys? How would you pick a bottom down here? What's the best way to pick a bottom down here? A crown reversal, right? A crown reversal. Because there's a lot of support down here, right? So if we make our move lower, we're getting our traps on the way down. How would you buy down here? You would need one of those crown reversal patterns. We talked about this last night a lot in the video, right? We need 2 tries from the bears, right? 2 tries and a trap low, right? A trap below that low. That's the way you buy when you're going against all the momentum, right? And we talked about this in last night's video. You have to be buying as low as you can because as it goes higher, who's waiting up there? More bears. Right? So this pattern right there, and look at how I draw this pattern. This is a very specific pattern. It's one of the more advanced patterns we teach in the advanced classes. Notice how this is a higher high and a lower low, right? It's higher because sellers want to sell high, right? They try once to go short, they go higher, they try a second time to go short, and we need that trap low, okay? Because we want to buy as low as we can, okay? And the reason why you got to buy as low as you can is because when you get this much momentum going lower, as the market pops up off that low, bears are going to want to come in and whack this thing, right? So you've got to pick that bottom really, really tight off of that low. All right, it's definitely more advanced pattern setup, and we'll look for that tomorrow as well in the trade room. All right, guys. So keep an eye on that. Again, as you roll over, it becomes very, very bearish. We'll see what happens here overnight. Lots of bull traps right now on the S&P. Let's keep going. How about some NASDAQ? NASDAQ is a very interesting chart this evening. NASDAQ is very interesting. There's a lot of stuff we could talk about on this chart right now. First things first, though, if you go into the description, there's some 60 minutes and some 4-hour time frames down there. And the first thing you'll notice is we're bullish overall for sure, but we have there's a lot of resistance levels overhead. There's a lot of levels right up overhead. And you'll see them better on that 60-minute and the 4-hour chart. So that's one thing on my mind, right? A lot of really big resistance levels up overhead. Combine that with this, to me, looks like a bull wedge, right? It's basically a bull wedge. We're consolidating. We're certainly bullish. Now, usually these wedges, once we start getting into those tight, narrow area of that wedge, we're usually due for a breakout or a correction, right? The hard part about these is you can't really tell what direction. A lot of times what happens is when markets try to break out of the wedges, they kind of overshoot them. We talk about overshoots a lot in our video classes. They overshoot the wedge, and these can lead to pretty big corrections, right? If the buyers were to overshoot this into, for example, right, I got my range on here from today, the amount we go below the range, above the range, that's resistance. And again, there's a peppering of resistance up here on the higher time frame. So if there is a trading god up there listening down in the video here tonight, what I'd love to do is get this thing to overshoot that wedge, right? Again, run into pendulum swing, a lot of overhead levels on the higher time frame, right? And then start to trap those buyers in and get that short back down into that trading range. That could easily spark, right, a pretty big reversal go down to take out one of these lows down here, right? Some of these lows down here, right? Now, of course, the other way to look at this is that, again, it's a bull market into a range. I mean, didn't we just talk about this last night, right? Don't these love to punch? They do, right? They do. It's just after seeing it today where you had that, I mean, this just teed up, right? This bull move up into a range just teed up here for these buyers, and they really couldn't get anything out of it, right? We're hanging out right there. So, kind of it appears these bulls might be running a bit out of gas. That may change for tomorrow. Again, these markets are highly unpredictable these days because of all the news headlines coming out lately, especially meeting about the debt ceiling tomorrow. So could easily rip higher, right? If it does rip higher, I like the idea of, right, fading off that high and then potentially looking for, right, some pullbacks as we go from there. All right. So we'll talk about that here in a moment as well. The real hard one right now is if we go lower, right? If we go lower, it's not easy to want to buy that low if we go lower here. It feels like if we go lower, they're going to try to take out some of these bigger lows here. Remember, that is the prior week close. Right, the prior week close is well below us, and as we get closer to the end of the week, the prior week close becomes a very sticky magnet. All right, so we'll cover a little bit of that on the short side as we go higher here. So I think the overall idea going higher is very similar to what we talked about in the S&P. Right, if we end up going higher here, running into some overhead areas of resistance, our biggest challenge is it's a great location because of higher time frame resistance, but momentum is very concerning. Right, momentum is very, very bullish. So if I want to be a seller up here, right, what I have to do is I have to give the buyers the benefit of the doubt, let them try a couple times to make sure they're not going to hold this and keep on ripping it, right? And once they try a couple times, then I can get a little more of an edge by using their stops as fuel. Now, this is where we have to pay attention to this trend line. All right. I don't want to go too far, advanced on this because I want to keep it as simple as possible. But for example, if we punch up and we end up rolling lower here pretty good, I'm going to want to see some sort of trap high on this entry, okay, because of that trend line coming up off the low. All right. Remember, the closer we are to support, the more, the higher the short needs to be. So I want to see these buyers try a couple times. It's kind of the ideal entry on this situation, right? Because that rising support trend line, because of the overall bullishness, will be to find some sort of 2 tries for the buyers. That way I know they're in, that way I'm not, you don't want to just try to pick a top on that, but see if we can get the buyers to commit to it, right? And then, again, the trap up there to avoid that trend line going higher. That would really be kind of the dream scenario, right, as we go. If we really punch and go higher, now, not as difficult, right? So now as we pull back, right, now we're going 1, right? Now, again, we're very bullish, right? So I have to tire these buyers out, let them show me they're not going to keep on ripping going higher. Once they try a couple times, then the order can get slipped in, right? And I can use their stops as fuel for that run back down again. All right. We may also see a pretty sharp correction, right? So think about this. We pop up, it slams right back down, and we start rolling lower like this, right? If that happens, you know what to do. You mark off that high, you mark off that low, right? And now what's going to happen? Rotation, right? They're going to want to rotate now from one side to the other side. Okay. Your job now at this point is to go out and find those channels and grab whichever entry pattern we can get off the top of that channel. All right. So we'd love to get, again, I'd love to get a pop up, trap some buyers in, but hey, who knows, right? We may run into some of these big areas of resistance. It may get clobbered back down again, whether it's like this, right? Like that for a trap, right? Or it kind of pops and grinds like this one, find that new channel. We're looking for that short, right? As it rotates back down to levels of support below, pendulum swings, right? And potentially kind of one big triangle, right? They're building right there. All right. This is a tough one. This is a tough one. This is definitely not the easiest one. And again, if we were to really rip higher here, really get some very strong confirmation, well, then the buyers, of course, are going to earn our confidence now. We now begin to use this range, of course, as a breakout pullback area. We start finding larger channels, start waiting for those deep pullbacks. I can look for those two try shorts off the high, but be aware, though, when you get those really strong rips like this, they're going to want to retest that high, right? So we want to get underneath that moving average, use that failure into pullback, right, combination, and back up from there, right? That failure pullback combo retest. We may end up retesting and then getting that 1-2 back down to dump from there. And I wish I had more concrete game plan on this, but this is one of those scenarios where, sometimes we just have to wait and see what the market gives us, right? The S&P is pretty cut and dry right now. There's a lot of variables to account for on the Nasdaq. If we only go lower, right? If we only go lower, really the only way to buy this, right, because of this kind of overall situation right now, is to get a crown reversal, in my opinion. You want to let those bears try a couple times. I would assume those bears are going to be trying to hunt for something down here, right? I would assume. So rather than simply blindly buying into it, there could be a trend line way down here too, right? So it's not going to be in a very easy to use area for those buyers. Let those bears try a couple times, right? And then back up. Now, notice how I draw this, okay? This is very, very important. I get a lot of questions about this every week, is that you want to see higher highs, right? When we go lower, you want to see one try, two try. You want to see higher highs, right? Make sure those bears are trying twice as they pull back to the moving average. We talk about this in the free trading course, but a lot of people miss that real small detail, right? So as we go lower, if it's going lower like this, and that's not it, right? If it spits down and starts grinding down, okay, now we know, right? Mark that new channel, right? Find those prior swings and look for the shorts, right, off of that high. All right. If all hell was to break loose and it just simply drops, right? What do? Traps. Right? If it drops, right, you're looking for traps, right, as we go lower. All right? And then who knows, right? This may end up being a bigger range down here. The Nasdaq can be wild sometimes. We may end up getting one of those crown reversals right off the low and back up into that larger range. All right, guys. Right now, my favorite trade of the Nasdaq right now, though, is that pop up, trap those buyers in, right, and back down. Again, if it starts to punch going lower, it'll all be about traps as we're going and trying to take out these lows below that low. All right, we'll know more tomorrow. Right, we'll know more tomorrow once we see more of what happens here in the overnight. How about some oil? How about some oil here right now? Oil seems to be pretty cut and dry right now. Oil seems to be pretty consistent here. We are basically bearish right now on oil. It feels like that trading range that we had in last night's video. It feels like now we have successfully 1, 2, 3 broken free of that trading range. Because of that, we now anticipate the underbelly of that range becoming like a breakout pullback area. Right? Ranges are pretty simple in that sense, right? We buy low, we sell high, and then once we get a breakout, once we see a convincing breakout down here, we then start using the kind of the underbelly, as I say, right, the previous levels of that range as key areas of resistance, right, for a breakout pullback. Really, the name of the game right now for oil appears to be short the bounces until we see something more tomorrow. Remember, we had a very big move down a few weeks ago when when the rest of the markets were freaking out as well, and so we've been kind of popping up and holding here against this major area of resistance. We're still relatively bullish in the 60-minute chart right now, but I think at this point, though, it looks like unless these buyers really prove to us they have the ammunition to roll back higher, even then it's very difficult to want to buy this thing as it goes higher. So short the bounces, right? So if we end up going lower here, right, looking to short the bounces there. If we go higher, this is kind of a pretty simple idea, right? I'm kind of marking up these lows, finding those highs. I've got these prior levels right here. There's a lot of areas of resistance. At this point, just a matter of getting up around these highs, getting some of these buyers trapped in, using their exits, right? Remember, in this area, right, sellers are selling, and if we can time it right, some stops here, buyers are selling as well, right? So failure patterns, again, this has been a faster time frame, obviously, tomorrow morning, right? This is a 3,000 tick chart. We're not trading off that, right, in our trade room. So trapping the buyers in, right, on the faster time frame, using those stops as we go. If we were to really pop up like this, right, keep an eye out for that kind of pop and that V off the high there, mark up those swings, find that channel and hit it off the high from there. All right. So as we pop up, we're trapping those buyers in, whether it be with failures or whether it be with bull trap patterns, right? If it really sharply corrects off of that high and try to sell this thing back down to retest the low. The other thing too would be if we keep on rolling lower here, we've got some pretty hefty support down here at 69.84. This is kind of this is a big support level on top of that big range that we had during that big bloodbath that we had a few weeks ago, right? So we have to assume there'll be buyers here. We have to assume this is potential to be a bounce. Normally what I would do is say if we go lower, look for traps going lower. You can try to do that going lower here, like I mentioned before on the Nasdaq, you can look for those, but I think at least from what I can tell right now, it looks like the better game plan would be if we were to roll over here overnight, we just simply keep on adjusting this channel down, find a bigger channel here, right? Wait for that pop up, and this range right here, right, can also be used now for a breakout pullback, right? Get above that moving average, use my trusty failure pattern, right, off the high of that 21 EMA, the high of that channel, right? Does that make sense? Right? So if we do keep on grinding down, I'm going to simply connect these lows again, just kind of structure that channel down even tighter here, and just wait for the pullback and try to keep on shorting this thing off the highs to retest, right, to retest the low. All right. And remember, if it pops up, right, don't go falling for those bull traps up there, right? 1, 2, back down and short from there, right? Pretty bearish overall. And again, we'll kind of keep an eye on these areas, right, as we roll lower. All right, guys, pretty simple game plan, right? Shorten the bounces, use buyer failures, use bull traps here on the crude oil. Even if we were to rip and run higher here right now, if it was to really rip and run higher, well, how would you buy it? You'd buy it off a trap, right? That's kind of the only way to do it, because once we get up around these areas, you don't want to buy up here, right? So trapping, little tiny shallow traps on the way up, and then, most likely another one of these 1, 2s back down into that trading range. So don't chase it if it ends up ripping higher here. And of course, we'll find out what we actually get here tomorrow. But, as I mentioned earlier, I'm not a big fan of making predictions. I'd rather just game plan and go through some scenarios. That way you've got a kind of a game plan to make money, and no matter what these wild markets throw at you. All right, guys? So now you know what I'm looking for here for tomorrow. Now we'll get a good night's sleep. Come back tomorrow morning, right? Prep the charts after the overnight and get back after it. Don't forget, we get together every morning in our trade room, 8 o'clock Eastern time, and we trade this stuff together. If you're looking for a place to come out and learn and trade along, you will love our trade room. We've got a whole professional video class. If you like my free stuff, you will love being a member and a student of our premium room. I'll put all the membership links, all the free course links, all the stuff you guys need in the description. If you have any need trouble getting into this free course, if you need any help along the way about brokers or data or computers, whatever, don't be afraid to call the office. I'm always here to help. My wife Megan and I are always here standing by. We've helped out a lot of traders in our teaching career, so I'll be happy to help out as any way that I can as well. All right, guys, I'm going to wrap things up here for now. Hope you learned a lot here tonight on the video. Thank you so much, by the way, for watching all the way to the end. I put a lot of effort into these lessons every evening, and you are the person I do this for every evening. So thank you so much for the dedication, support the YouTube channel. Now get out of here. Enjoy the rest of your evening. We'll see you tomorrow morning in the morning trade with members. If not, we're going to come back next week and we'll do it all again in the third week of the month of May. Have a fantastic evening. If I don't see you tomorrow morning, great weekend. Be well, be nice to each other, and you better be here next time. Adios, amigos. Bye-bye for now.